Good day all. Ira Epstein of Linn Associates with your financial market wrap-up, and this is for Thursday, and we are now sitting here on the 28th of March 2019, getting on to 4:10 in the afternoon. Interesting day, because what all the stock indices did is what I was hoping they would do. As a group, they retraced to their 18-day moving average of closes, which, like a pinball machine, if it was tilted, in order to get the market back into sync, you got to hit that, reset button. Well, when you hit the 18-day average, what it does is now it tells me the markets are looking for something else. There's another element here. Notice copper was up and the other markets were down in most of the metals. What else? We now have Steve Mnuchin, our Secretary of the Treasury, in China with Robert Lighthizer. Do you want to be short if they release a good piece of news? That becomes your issue. And the fact that the Chinese are coming supposedly, unless this whole thing blows up, supposedly back into the U.S. next week to do more. And according to news reports, the Chinese have given a substantial ground on the transfer of property, and they've put an awful lot in writing. Now, I'm sure that we're only getting the pieces that they want us to hear about how this is all going, but I watched the market. I watched how the president keeps talking. The negotiations are going well. We know he needs a win. I'm just wondering. That's all. When we come over to the S&P, here's the thing you have to pay attention to. On a weekly area chart of closes, you're up 10 points for the week. But at this point, it's still the highest close since all the way back here into October of last year. So I realize everybody says, this market's going to come down, and they're all watching at the 2750 numbers. I understand what they're looking at on a closing basis. I watch CNBC, which have great market analysts, and I know where they're at, but the market isn't breaking down just yet. Now, admittedly, it hasn't gone up again either. What we've done is we've gone sideways in this pattern, and when we start taking that pattern apart, here's what you get. You have a pattern of lower highs, but you also now have higher lows. You're out of a trend. The trend can reassert itself bullish by getting over yesterday's high, which is 28.35, and then not getting back under the current low, or the market gets under yesterday's low of 29.71.75 and doesn't go back through today's high. Which one of the two? Because either one, the way that the setup is going to set the swing line. So where are the moving averages to see where they're at? Useless. Remember what I said? Markets that often get up pull back to this 18-day average to look to see what they're going to do next. This is, I want to see what they do next. So that's what I'm looking at right now. When I look at the Bollinger Band, it is not uncommon if you hit a Bollinger Band for prices to try to regroup against that 18-day average. If they go down, it's not uncommon that they regroup it to figure it out. Well, you hit it up here, you've regrouped. In fact, you hit it this day, that day, and that. Okay, I can even go a little further in front of it. It's the regrouping process that we're in, and as this is going on, the market has for the first time gotten out of being overbought. It's ready for another leg of a trend from the looks of it. Does it have to happen tomorrow? No, but you're back to the point where if you're a hunting dog, your ears are up. You're looking around, you're sniffing because you're ready. When we come to the NASDAQ, the market regrouped, fell back to the 18-day average of closes. Now, unlike the S&P that we just looked at, this has a lower low. So even if it went up, it cannot turn into a buy signal. In addition, this market is still overbought. If you look at the D reading, which is the blue on the slow stochastic, it's two lines that crisscross. One's called a K and D. I have no idea why. But they crisscross. They're the identical formula. One uses on a daily chart 3 days worth of data, the other 5, and it's like moving averages crisscrossing over each other. Well, you're still in overbought territory. That doesn't mean that if you took out this high, you couldn't make a run towards that Bollinger Band, but it would not be an uptrend. It also means that if you take out 72.76, you, for the first time, would be back under this 18-day average, and if you closed under it, you're putting into play, or if you stayed under it even intraday, the possibility of the 200-day average. If that gave ground, then the lower Bollinger Band. In the Dow, if we take a look at the low right here, this low on this day was 25,377. You see it right there. Now let's go back up and come back down. This low is 25,441. It's more like the S&P. And with today's rally, even if you broke through this low, you cannot start what? Because you've got a higher high, well, actually, in this case, it would. If you didn't take out 25,822 and you broke through that low, you can go into a downtrend. If you take out the high here of 25,822, you're back in an uptrend. Momentum has flattened itself out. So if it goes up from there, your top resistance is 26,021. Again, I am that dog with the ears up and I'm sniffing, looking at the market. The Russell's putting in itself a way to attack now the 18-day average of closes. I have momentum up. The bias is down because you're under the 18-day average and the swing line is up. The market did stop at a key number, the lower Bollinger Band and 100-day average of closes. And from the looks of it, if it rallies, that becomes a key number. Close over 1546.20, and believe it or not, you're in an uptrend again. You'd have the bias up, momentum up, trend up. In the VIX, I thought the pros were writing the calls against the upper Bollinger Band. You've gone down and you've just sat now for 2 days on that 18-day average. It's not about a trend because the trend is lower high, higher low. It's not a trend. You're just drifting sideways in this market with, by the way, momentum is just drifting. Then we get to the bond market, and I'm going to say it again. Slow stochastics, if you believe like I do that momentum often leads price, then you look at something to do it. It could be MACD, it can be the relative strength indexes. We all have different ones that we like, and I became an expert in them, taught them for years, and I fell in love with the slow stochastics because I find that it has a personality. There was a gentleman, I think the tape reader or stock trader, Peter Elides. And Peter did a great job of identifying, if you were Fibonacci, what legs you were in and the personality of these different markets. And I remember him telling me this had to be 25 years ago, 30 years ago. And I said, gee, if I could find other indicators to do that were more tuned to a commodity type thinking than that for me, I'd like to run with that. And I needed something that wasn't as esoteric, to me at least, as the Fibonacci and the Elliott wave theory and all that. I find that very difficult for me. That doesn't mean there aren't people that aren't great, that Gann and all that. I'm just not one of them. So as I looked at this market, I see it's riding the upper Bollinger Band, but more important, the momentum is totally locked in. Now, if you lose that momentum and you get the red line to close under 80, the odds will favor that price and the 18-day average will make a run at each other. It's the 18 because the 100-day is much further down than that. That would be the percentage play. Doesn't mean it's going to happen. I'm just saying that would be the percentage. Have we lost the embedded reading? No. So that tells me that you're getting on breaks the buyers there. You're getting on breaks the buyers here in the 10-year note. Why? Until this market loses that embedded reading, you still have the 18-day average with the bias up. You've got higher lows, higher highs. And this is called riding the Bollinger Band. When a market just stays over the Bollinger Band day after day, it starts setting itself up for a good pullback. It also tells you how strong the market is. Riding the band is the strongest of them because it doesn't get ahead of itself. It gets over it, pulls back under it just slightly, back over it, back under it, but it keeps pushing out that band, and that's very important. TLT, the popular ETF, doing the same thing. The embedded readings, the trend up, riding it away. When we come to the dollar index, I'm going to repeat what I've said in my other videos, metals and so on. This bothers me. this day and this day. When you get a swing line low and it gets extended by an outside day down and then you come back to take out the high of that number, it's a rough pattern to trade. Overall, I'm giving the nod, as I said yesterday, to the bulls. I'm going to still say it's higher lows, higher highs. You are overbought. Not sure if you're going to reach up here for the upper Bollinger Band. You don't have to. You're in an awful lot of resistance and overbought. But the trend is not down. I've got to give the trend to the upside as the trend is down in the euro currency. Now, like the dollar, will this market extend down and let the traders out that I think the pros are short at the lower Bollinger Band? If they're like me, you don't need the last penny, but it often makes a run there. And as you take a look at the market, you're into oversold territory in a downtrend. Even if you had a hard rally, you have resistance at the 18-day average of closes. In the British pound, I watched Parliament again today, and now it's all changed again. Ms. May has changed her plan, where now they're just going to vote on half the plan, which is, do we withdraw or not? And the speaker, Burkow, is it? I love watching the man. Division. It's crazy if you watch it. It's best TV there is. And as I was watching it, they're going to have the vote tomorrow, so we'll have another idea as to what goes on. It's interesting because tomorrow is, in theory, the official day of leaving Brexit, although you can get extensions. I have the arrow wrong here in looking at this. This arrow should be pointing down. I just missed it. You have a higher high, lower low, not a trend. Momentum got caught to the downside, and suddenly you're making a run at the lower Bollinger Band. I think trying to trade this British election, I'd rather go to a casino. You have no chance, in my opinion. Every day is a new story. In the Japanese yen, suddenly we have lower highs, lower lows. If we look at today's low, it's 90.77. The market seems to be making a run for that 18-day average of closes. Now, it fought for 2 days against the 100-day average. It tried a higher high today, and that gave up miserably. I'm just wondering if that means the safe haven play is coming off, because that's where a lot of people run for their safe havens. We'll see, but you're out of the uptrend. That's the important thing. Excuse me, in Bitcoin, I'm still overall friendly the formation of Bitcoin. It's staying over the 18-week average of closes. It's making another run, if it can, towards the upper Bollinger Band. It's overbought. I think it's going to just spend time in here, but, you know, a market that goes from $20,000 down to $3 and starts going sideways almost is telling you that either it's going to zero, or if it has value, maybe it's wrung all the people that had a run out of the market. In WTI versus Brent crude, the differential is still about $7, narrowing in. It still favors, because the market's under the 18-week, that it's WTI being stronger than the Brent. And when we take a look at the chart here, you can see how this market's pointing down in momentum. We have a market caught in the sideways action near the 18-day average of closes. While the swing line is down, the market's refusing day after day to settle under the 18-day average of closes. That is not a trending market. It is just a market that's winding up for a play in here. Trick will be, and I want to use that word, trick will be trying to catch it. In WTI, you lost the embedded reading today. Unfortunately, there was no play to be made, because when it happened, it all happened at one time and it went right to that number. And like the Brent, it settled over it. So while the swing line is down, it has come back to the home to roost of that 18-day average. The traders looked at that and they said, okay, that's a support number, and whatever it did from there, it held. When we come to the rebob, just want to show you. Yesterday, the market had the embedded reading. You lost it last night. I think I said that unless it opens higher, it's going to make a run for that. It broke down that, but it instantly hit the number. There's no play left. So now you've got a lower low, higher high in a market that's overbought. It has to work that overbought condition out. In the nat gas, we're at a funny time of year. You're neither cold nor warm. So the demand for the nat gas isn't there, and we saw that today with the EIA numbers where it came in about where the trade estimate was, but down substantially from where it's been. And the market's been telling you that with lower highs, lower lows. Pay attention. This market's refusing to stay under the lower Bollinger Band. It's oversold. Resistance now the 100-day average of closes. You know, my metals report, by the way, I'm taking off tomorrow. So if you haven't seen it and you go to our website at www.iraepstein.com, go under the word education, you can view it. It comes off. I don't want to keep libraries of my old reports up there. The reason is they're meant for the point in time that I'm putting them out. And I've got a market that has pretty much done what I was hoping it would do. And now I've got to start thinking, okay, what is next? So if you want to see what that was, take a look. Go over here, iraepstein.com under education, and I'll see you tomorrow.